Hello traders, Chris Paul over here with Market Traders Institute, and I wanted to walk you all through the Swiss franc prediction. Let's go ahead and go through the slides, and I'll go into the charts, and I'll provide some key strategies and clues to look for when trading these setups. So let's go ahead and through the information here. Why the Swiss franc? Well, just based on technicals, number one, the Swiss National Bank, or the SNB, does have a reputation, unlike most central banks, for high levels of intervention and manipulation of their currency pair at significant technical levels. The Swiss franc is a technically obedient pair. It's an obedient basket. And other than the teleportation heard around the world in 2015, the Swiss franc is very tradable. Margins went back to normal shortly after the Swiss National Bank debacle back in 2015. That was in January. And since then, the Swiss National Bank has been sitting at negative deposit rates. So it is one of the weakest yields in the majors, or of the major currency pairs, sitting at negative 0.75%. So basically the SNB tries to make it a non-incentive to hold Swiss franc reserves. So that means that money is going to be shifting elsewhere into those yielding currencies. Mainly the US dollar is a great one, but the entire basket, essentially everything, is positive trade, positive carry, and positive rollover against the Swiss. We also look at the monetary policy. Recently with the LIBOR rate decision and recent statements delivered by the SNB, they continue to express they want to keep interest rates low, remain accommodative. They are not pegging the currency any longer for the Euro Swiss at 120, but that still serves as a fair value or balance level after that 2015. In fact, in 2018, the Euro Swiss did rally from 110 all the way up to 120. We've since, had a little retracement. We're down to the 114, 115 level, but longer term, I would suspect that the Euro Swiss will be well above 120 in the future. If we take a look at those other currency pairs, Aussie Swiss, New Zealand Swiss, CAD Swiss, Pound Swiss, we're looking at, near historic lows and strong support areas. And then we look at something like the dollar Swiss. This is probably one of the most appealing trades in the FX market, considering the Fed and the central bank continues to raise rates well over 2%. As the Swiss National Bank continues to sit in negative deposit territory. The SNB also has a vested interest in making sure that, dollar Swiss goes to certain levels, and I think that's why that Euro Swiss is also important. So long story short, the basket technically looks very good. A lot of times in the Forex market, there's a balance between technicals and fundamentals. So technically, these setups look really solid. Fundamentally, we're going to see if something can help drive this and really start galvanizing the movement towards our predictive levels. So let's go ahead and take a look. Opportunity-wise, again, I'm looking at this from the conservative level. Aussie Swiss range from historic lows, about 1,000 pips. CAD Swiss coming off of a channel, 800 to 1,000 pips. Swiss yen, we're looking at some really nice highs around 118.50, possibly a round number at 120, 500 to 1,000 pips for a channel. It actually could exceed that dramatically. I'll talk about that when I get to the charts. Euro Swiss, we're staring at somewhere around 800 to 1,000 pips, depending on where the bottom forms. Pound Swiss, same thing. Even if we have a couple of range levels, we're looking at 1,000 to 2,000 pips. New Zealand Swiss, near historic lows, 1,000 pips. And dollar Swiss, looking for a continuation pattern that is 1,000 pips. So when it's all said and done, again, conservatively measuring these opportunities, I'm looking at the basket, which is 7 currency pairs, around 6,100 pips of opportunity. If we take a look at our Aussie weekly chart, you're looking at historical lows. Currently, we're sitting just below this range breakout. We had some summer chop from August, June, July, August. We finally broke this low around 7,200. We did drop towards the round number around 6,900. So, again, major lows a little bit lower around 6,550 to 6,600. If we happen to form a really solid reversal pattern, that's essentially what I'm looking for. So I'll go into the charts and go into more details there and show you what we're looking at on the shorter term. But just a simple trend line break or a bottoming formation or a double bottom off of these historic lows will be a great spot to be buying low. We had the same opportunity over here with this giant fall with the Swiss National Bank in 2015. We established the low, retraced, established a fresh low. That level of divergence created this correction. So we ended up rallying all the way back up, establishing this range level. I think that's what we're capable of coming back to. Again, longer term, there's more opportunity than just the 1,200 pips. That's why I'm looking at this from a conservative standpoint. If we find this low, we're going up around 1,200 pips to hit some range highs. Lots of previous support resistance levels there. If we go into Aussie Swiss, closer up, and I'll get to the charts in detail, we're looking for just a simple trend line break or a bottoming formation. CAD Swiss is a channel, and, you know, we have some support levels lower. I mean, we see these massive channels. They are really significant. The support levels, you know, it may not turn exactly at channel support. It might come down a little bit lower and test this low. It may test this low. It may even test this low. But even if we play the channel, this channel is about 800 pips. If we go any lower and we rally, if we go any lower and we rally, if we come all the way back down to a historic low double bottom, we're looking at rallies all the way up. This is my minimum target right there. We've had several attempts to get to that high, but we've failed, and I like the fact that it's a nice round number at 8,000. So technically this level is around 8,100, 8,150, but even if we get to 8,000, we're looking at levels between 74, 70 even down towards lows here around 6,600. So if we have 72 to 8,000, that's 800 pips. If we have 70 to 8,000, that's 1,000 pips. If we have any of these bigger levels, we're looking at 1,000 plus pips just to play back to this probable level. It's also a positive carry trade with the CAD. Currently, the official cash rate is about 1.5%. Next up, we have the Swiss yen. We're looking at historical highs. Again, this was all back in 2015. Big move to the upside. Historical high was created. We have this really nice high to low. This essentially is all correction. So if we're looking at this from Fibonacci's, this would be your capital A. This would be your capital B. We're trying to look for the established C with the longer term push down to a D extension, which again, you can see that just that alone would be a monster amount of pips. I mean, we're looking at 3,000 pips from this high to low. So if that's matched with symmetry, you're looking at a 3,000 pip move. But again, conservatively speaking, this has taken several years to play out. We are predominantly in a range-bound market. So this low to this high, to this low to this high, we have some really nice resistance around 118.50. That might provide a nice rejection here coming up very quickly. We may also hit slightly higher around the 120 to 122 area. From there, I'd be looking for topping formations and then look for a trade back into this channel. So again, conservatively, if we have the 118 down to 111, there's 700 pips. If we have a high of 122 all the way back down to channel lows, we'd be looking at roughly 1,000 pips. So if it gets any bigger than that and breaks out of the channel, obviously that is a much bigger opportunity. But conservatively, if we get a chance to trade 118 down to the channel lows or a channel high to channel low, we're looking at something like 1,000 pips. Euro Swiss, another really good technical setup. This was the 120 mark right here. This is 120. You can see the significance of that number. We had this giant falling wedge and a rally straight up to 120. Now, once that level was achieved, we had a corrective A, B, C. We're looking for this to finish with the D. Now, it's already underway. We're looking to see how firm this goes to the downside. We have some really nice levels of support somewhere in here between 110 and 108. So again, I'm not exactly calling the bottom per se, but once we get on the right-hand side of this wedge and break this trend line, I will be looking for bottoming formations for simple trend line breaks and look to stay bullish, just like we would have been doing over here. When we had the bulls in control, we break out, break a trend line, we break out, we break a trend line, we break out, we pause, we go up, break a trend line, rally again, break a trend line, you know, pull back down, there's a correction, go back up again. I mean, it's all bullish is going to be the focus. So if we end up falling a little bit lower into 110, go to 120, that's 1,000 pips. If we come any lower than that, we're adding more opportunity there for 1,000 plus pips. So I'm watching this wedge formation. I'm looking to see if this A, B, C, D correction is going to complete itself around the 110 handle. All right, I'll get into the charts and draw this up more specific, but that is the overview of the Euro Swiss. We're looking at this ABCD correction and this pattern to play out, starting to look for bottoming formations and then a rally back to 120. Pound Swiss is a few different scenarios. We're currently trading around 125 and 126. We have some major support around 1.21. We have historical lows around 1.18. So we might see this have one more push to the downside with this push and pause, push and pause. We might push down one more time to 1.21, possibly a round number like 1.20 before we start getting a rally. That would be this 1,000 pip measurement. All right, if we end up finding a double bottom or major support off of 1.18, another really key level to look for some bounces, rejections, bottoming formations, and then start rallying back up. I think target 1 would be all the way back up here to this previous high. We have a nice little trend right there. So if we get all the way back up to this green line, if it's from 1.20 to 1.30, there's your 1,000 pips. If we're a little bit lower than that, back to the green line, we're adding, a little bit of a surplus on top of those 1,000 pips. If we come all the way back up into this high, now we're looking somewhere around 2,000 pips. So it's a big opportunity. Pound Swiss is one of the higher volatile pairs of this basket, but at the same time, it's still a good technical setup with major support around 1.20 and 1.18. New Zealand Swiss, similar to Aussie Swiss. We have a major level right there around 5,700, another big round number at 6,000. If we hit a round number and start to react to that. So simply put, we just have some range-bound trading. We broke out of that range. If we look to bottom out earlier and break this trend line, we can go all the way back up. We may even go higher. If we come all the way back down to revisit lows, that's the big opportunity for a massive double bottom. Now again, targets would be here. You'd have this low, you'd look for a double bottom, you would trade it back to this previous support resistance, back to this previous support resistance, and hang on for a long time and let those profits run and see if we can really head all the way back into this Swiss National Bank candle in 2015 and also that major resistance. That would be a big level. Again, conservatively, there's your 1,000 pips. If we go up any higher, there's a surplus. If we go up any higher, we're just adding more profits to it. That's also a positive carry trade. Dollar Swiss, this one is a continuation pattern. We've already had some strong lows in the market. We have a lot of consolidation. What I'm liking on this one is a nice support area between 9,600 and 9,400. Looking for a bottoming formation on smaller time frames. Looking for some strong support, just like we had here. You can see these equal lows. I will be looking for some type of support around 9,400 or 9,450. If we simply break a trend line, let all this noise play out. As long as this gets on the right-hand side of the trend line without drastically going lower, this should be returning back up to previous highs, which is above 1.00, and previous highs way up here around 1.03. So basically, if we're looking at 9,300 or 9,400 for the lows, and we run all the way back up to 104, there's your 1,000 pip movement and a continuation pattern on the dollar Swiss. All right, so what I'd like to do now is take a quick peek at the charts and just walk through those setups one more time. Here is the Aussie Swiss. I'll just do this in alphabetical order. There is your break. So we have our breakdown, which happened here in August. Break to the downside. I'm simply waiting for the right side of the trend line to confirm. Now we might have this break and pull back, break one more time, pull back. I'm looking to see if we can get down into these really enticing levels to buy. Okay, or if we get on the right-hand side of the trend line, we might push down to the low again, to the double bottom area, and still look to buy it. So a couple of strategies would be, if you break this trend line, you're just simply looking for bullishness, a little pause, and a trend line break. Bullishness, look for a pause and a trend line break, and see how many trend line breaks we can get. Aussie Swiss is traditionally low volatility, but with big levels of support and likely some bullish momentum behind it, we should see some trends to the upside. The question really is, are we going to start getting trends on the right-hand side of this trend line, or is it going to be more of a push to the lows before we get that big move to the upside? Either way, I think that we're going to end up ranging back up towards 7,700 and higher. Another round number to trade it towards would be 8,000 on the Aussie Swiss. If we go to CAD Swiss, okay, here's the channel on CAD Swiss. Again, we're starting to turn off of these lows. We might have one more push to the downside, maybe one more push to the downside to test these levels and basically flirt with the break of this channel. But I think from there, we're going to start forming bottom formations. We've done that before. We had a big bottom there, and there, and there. We have these very sharp U-turns on the CAD Swiss. So I think that is the case right here, is we're getting sharp U-turns. So I want to see if this is a sharp U-turn, or we have, even a retest of the low and a sharp U-turn. Then we start planning our movement back up towards channel highs. Strategy-wise, again, you can simply wait for this trend line to break, and we're forming a bit of a wedge. So if this wedge plays out, let this wedge play out. Let's get on the right-hand side of this wedge. Let's confirm that we're bullish. Then we can start looking for trend line breaks. We can look for our, traditional stochastic U-turns like we'd like to trade in the Ultimate Traders package. anything that would signal we're at a low point, we're looking to buy. You can use oscillators, you can use trend lines, you can buy low. We're just doing all sorts of things to focus on bullish behavior. That's CAD Swiss. Euro Swiss. Actually, no, I skipped one. Swiss yen. Here's Swiss yen. Again, that weekly corrective channel. We have some resistance at 118.50. Now, that's a resistance area, or again, it might try to go up a little bit higher to 122 before falling back down. And again, this is still a big formation and a big push to the downside. Lots of opportunity for this Swiss yen to break all the way down. But even from this move down to the channel low, or even from this channel high to channel low, that is the move that I'm after. So if we come into a slightly smaller time frame, there's just a simple trend line break. Okay, we have some indecision here at the highs, but it's been a very steep movement. So if we start breaking this trend line, I will start looking for the Swiss yen to roll over here. So if we get on the right-hand side of this trend line, make sure this area stays resistance and see if it rolls over back down to previous lows. Watch this range. This is also the channel support. So that should be a 700 to 800 pip move. If it goes up any higher and it does not break this trend line, then we are simply going to wait for this to break the trend line. Get on the right-hand side and then start looking for pullbacks, trend line break, pullback, trend line break, pullback, trend line break. Okay, we also have, yen pairs like to also provide some flag patterns. What that might look like over here when it's falling pretty steep is you have a push and then a pause, and then it just breaks again, and then it pauses and it breaks again. You might not have great trend lines per se, but look for this to still make lower highs and lower lows once we roll over onto this trend line, or the right side of that trend line. Euro Swiss, here's that wedge formation. So A, B, C to D. The actual D extension from this corrective movement is at 109.71. We may not hit it to the pip, but that's also rounded towards 110. Okay, so if we end up hitting 110, that's not a bad spot to look for bottoms. That's right in between some major support levels. But right now we're just watching this wedge. If we end up forming, this low to a high and then pull back, we might start breaking this wedge sooner than later. And this could be nothing more than a abbreviated correction that starts getting back out into this deeper level. We might come all the way back to 118 or 120 and establish more of a range. So I'm still willing to buy this Euro Swiss if we break this wedge, but I want to make sure that there's some type of structure in here that I can buy. Ideally a head and shoulders or a crown formation that we can buy. If you're looking just for simple trend line breaks, wait for it to get outside of this channel, start lining up those trend line breaks and going after 118 or 120 again. If it does not come all the way down to 110, then I'll be protective of those profits in this area. If we come back to 110, then I'm only looking to let this thing run towards 120. Okay, just because if we pull back here, if we have a little formation and it starts reversing, this may still work its way back down and complete this D extension. But I still think we're going to have a chance to trade to the upside. The preference, of course, is that we keep grinding out this falling wedge, find this 110 level in this D extension, and then we get the reversal pattern and the rally to the upside. So we'll keep some tabs on that one. The pound Swiss. This one might be a little trickier just because it's a higher volatility pair. The margin requirements are slightly different on this one as well. It's a bit more expensive to trade than others. We do have a decent move to the upside right now, and this may be underway. Okay, we still may pull back from this area. We might still be heading back up towards this green line right now on the pound Swiss. So if we see a push and a pause, look for a flag. Push and a pause, look for a flag. Push and a pause, just like we had over here. Trend line break, trend line break, trend line break. On smaller time frames, you can see all these flag patterns on the way up. So you can see what's happening with this weekly candle right now. There's a nice looking engulfing candle. If that gets any bigger, that's going to be a pretty good sign we're putting in a temporary low. We might come all the way back up towards this green line. If for some reason the pound Swiss is a little bit more difficult to grab, I mean, again, we can still have flag formations and trend line breaks going back up to this green line, but just remember the big levels. These big levels are here for a reason. If the market happens to come up to this green line and score a point and then fall all the way back down to this area or this area, guess what? The trade is still the same. It's still the same valid level that we want to buy low off these crazy historic lows and these support levels and take it up for a big buy opportunity. So right now, we'll see what happens. If there's flag patterns, there's another probably 400 to 500 pips to the upside on this pound Swiss. But ideally, as we start settling in around 122 or 120, then start looking for those nice bottoms. New Zealand Swiss, again, similar to the Aussie Swiss. I have this chart marked with a yellow box off of historical support. If I compress the chart, you can see we've had 1, 2, 3 tests of that level, and every time we've offered really strong bounces. So, moving forward, current price is sitting right in between. Now, we had a nice clean breakout during August summer trading, broke out of support around 67, ended up falling a few hundred pips. The question now is, are we going to retrace back to this level and start falling once again to complete this movement back down towards lows, and then we get the rally? Or is this movement here the low to high? This whole movement is corrective, and we start forming the bottom that gets us all the way back to the top. I'm trying to assess that. Right now I'm basically just waiting to see what type of bottoming formation can I have on this New Zealand Swiss. The real bottom would be down here. That'd be a great level to buy low and really just hold on to it for a long time. Double bottom, historic lows, those are great levels to hold on to and get a ton of movement to the upside. If it's somewhere in between there, okay, we'll just wait for the trend line to break. We have a firm level of support resistance around 67. We may come all the way back up to range levels at 72. That's still an 800 pip movement. All right, but from this low, if we hit it to even this first level of support resistance, there's your 1,000 pips. If we go up any higher, you're adding another 500 to 600 pips to that. If we go up any higher, you're adding another, basically another 1,000 pips. So again, you can see near these historic lows, lots of opportunity on New Zealand Swiss. Right now, just waiting for a simple trend line to break, or just evaluate this one with some bottoming formations on some smaller time frames. The dollar Swiss, looking for this continuation pattern. We have resistance and support. Resistance is at 1.0350, so basically 103.50. We have major support at 94.50. So I am looking to see if we get a nice bounce off of 94.50 like we had here back in 2017. If we can create some nice bottoms there, I would look for this to be the spot you look to buy, and then plan on this trade going all the way back to 1.00 and all the way back towards 1.03. So from 94 all the way up to 103 or 104, there's your 1,000 pip movement. It's also a really nice continuation pattern. Left tip, center tip. We're waiting to see this is an A, B, C. We're looking for that C to D push on this continuation. Plus, it's also positive rollover on the dollar Swiss. Everything against the Swiss franc is positive rollover. That means that by buying low, the rollover between one currency pair and the Swiss franc, you'll be making money on a positive rollover. In addition to that, if you're making money on pips, that is a nice little magnifier to have positive rollover and make 500 pips, make 1,000 pips. That way you're getting paid to hold and you're getting paid to profit. So as everything develops and unfolds on the Swiss franc, stay tuned and we will continue to trade this and update everybody. I am trading it in my live accounts. I'm trading it just solely on this Swiss franc prediction. I have lots of interest in this. Again, it's not 100% guaranteed. There's always risk in trading, but I like the probabilities with a basket aligning on larger time frames. When these come together, these typically produce those large opportunities for movements. Every year, there seems to be a basket movement of some sort that reveals thousands of pips. I mean, just in the last couple of years, it's been the dollar or the yen or the pound or the euro. Every currency pair that it trades against, when you have these basket alignments, they typically line up for 500 to 1,000 pips. You take that across 7 different currency pairs, you're looking at 3, 4, 5,000 pips worth of opportunity. So the Swiss is no exception. We're looking at 6,100 pips conservatively. Let's just see if we get some simple trend line breaks, bottoming formations, or topping formations in the case of Swiss yen. But you understand what we're looking to do. Stay tuned, more to come, and I'm looking forward to some profits, everybody. Again, this is Chris Pulver with Market Traders Institute, and happy trading, everybody. Take care.